Awesome. All right, you guys have got it going. You handled the fundamentals. You have the rules down. And you really understand everything that's going into this, which is super exciting. We're gonna go over one more crucial element. It's just a special candlestick pattern, kind of based on hammer candles. And then we're gonna look at a really awesome case study, and then look at how you can apply that case study to actually scale and leverage your way into really awesome positions based entirely on dark pool investments, and then using that to create really great trades, which I think is super exciting. So with that said, let's go into it and let's make it happen. Cool. So the way this section starts is it kind of focuses on Doji candles. Now Doji candles, guys, are very similar to sort of like hammer candles, and basically it's just hammer candles that close without any volume. Or so these would be like hammer candles that close, but it's like the exact same price. And then there's also like just like really big tails on both sides, so maybe like unidirectional hammer candles. Pretty basic stuff. You want to look at these dojis. That's what they call them. They call them they're basically the same. I want you guys to basically just think of these sort of the same as hammer candles. And basically the thing you want to look at here is these are going to be indicators of reversals in any kind of trend setup. You know, she goes super deep into everything here. But basically the key here is that like the most money is to be made when there's a giant freaking hammer candle and then there's a big reversal, and you can short it or you can go long if it's, you know, the other way, right? If it's going down a whole bunch and then there's a big freaking hammer candle and then it goes up a whole bunch. Like this is sort of where the most money is to be made on, is like the reversal, right? And you can combine this with like stochastics and MACD to kind of figure out exactly where that bottom is. And also RSI would work really well, like a 2-period, if I can spell, a 2-period RSI would work really well in this situation. So definitely, I mean, this is just basic. You just combine like technical analysis with these setups, and it's just pretty basic stuff here. But she does go over it, and it is important. And she also introduces sort of these blank candles right here, where it's just up and down a whole lot and then blank. You won't see those a whole lot, but when you do see them, you can kind of tell, look, this is a sign that something's going to reverse here. Trend might be changing, and you want to sort of combine these indicators and combine these setup just with technical analysis, and then also with dark pool scans, right? So you want to see if there's like a big trade going on at the same time as one of these candles, and that's a good way to get into some positions. And then also just technical analysis. It's just basis of figuring out where stock's gonna go. But definitely some cool little setups that she kind of focuses on, which are sweet. And again, the idea with these, if you want to make like an investment on them, is you definitely want to see high volume, just like we just talked about. You want to make sure that it opens and closes at a very close price, but at the same time it also has a lot of volume supporting it, so you know that it's a legitimate like indecision between buyers and sellers, people not being able to tell if they want to get in or if they want to get out, because that's really where you do start to have these squeezes and these reversals where you'll have people that have to get out or get in, and it happens very quickly and create a really fast move, which is pretty cool. And that's kind of what happens here in this example. Bank of America, you see they had this reversal right here, very tight little doji, and then it goes right up, which is pretty cool. What she talks about here is something that I think is so critical, and we've talked about it before, so I'm not gonna harp too much on it. You definitely want to make sure that if you're looking at, say, the next candle after doji or the next candle after hammer candle, or whatever, like you want to make sure that this next candle closes above the candle, or it closes below the candle. And again, the key here is that it actually closes above or below. Like it's got to be one or the other. And again, it's got to close. It can't just temporarily go below. It's got to close sort of either above or below it, and a close above it is bullish and a close below it is bearish. These are just basic core concepts. I mean, this is all in 9 to noon. You guys know this stuff. So just kind of a quick refresher. You just want to make sure that you wait for it to close, because without a close, you don't really know exactly where it's going to go. It's just a bunch of noise. So yeah, cool stuff there. So with that said, let's go to Bank of America, which is kind of exciting. I'm super pumped for this example. So Bank of America, she's looking at this example, and basically there's like this big doji candle, and then after this doji candle, it went up a whole bunch. And when I say a whole bunch, it went from like 22 bucks to like 24. So, which is pretty sweet. Now, what's cool is like you can look at the the dojis and the volume and everything. But the most important thing, and what you want us to focus on here, which is like the key, is that there was a 2.7 million share block traded at 22.36, sort of at the end of the day, right when this doji, right here, right on this day right here, right? And so at the end of that day, there was this huge order with only an hour of trading left. Like, the order comes in, you've got one for 650,000 shares, then another one for 2.7 million shares. And the one for 660,000 shares was at 22.20. So you can see that the person who got, and this was earlier in the day, this was at like 9:30. So the earlier trade got filled at a lower price, and the price went up for this trade right here. So you can see if the price is going up after the big guys get in, then you can tell that it's probably them buying and creating new highs, which is really, really, really cool. And so the strategy here is to wait to see what happens on the next day. So the low for this doji candle day, the low was at 22.07, which was like kind of below the huge print, and then the high was at 22.41. And so these are really, really good targets, because most of the big prints here are at what? They're at 22.36. So if it closes above 22.41, you're going to be above the print, and you're also going to be above the doji, and so that would be a buy. And if you're going to close below 22.07, close below it, you're going to be below the print, and you're going to be below the doji, right? So that's where you would sell. And so that's where you get your target numbers. You get them from the previous highs and lows of the doji. So definitely a good way if you have sort of this indecision and you can't figure out if people are buying or people are selling. You want to look at sort of the height of this special candlestick setup, right, where it opens and closes at the same price basically, with a bunch of upward and downward volatility on the wicks. And then just figure out, okay, if it goes above, it's going to go up. And if it goes below, it's going to go down. And so that's how you can get your price targets on. You don't have to make anything up. You just base it off the candle. And the next day, they opened up at 22.30. And they went down to make a low of 22.26. But 22.26, they came back up. And over the course of the day, they climbed back up to make a high at 22.62, and they closed the day green at 22.60. So because they closed at 22.60, they closed above this prior price target, and that is where you get in and you buy. You can buy calls, you can buy direct stock, but this is exactly where you want to get in. Either in the post market or just like the next morning, you want to be in this position because you have this huge person buying, and their position was, they bought and then it went up, and it went up past your target level, which means that you know that they are moving to that next level. They're going up, and because they close up here, this is where you get in. So it's a really powerful way to combine your candlestick setups with dark pool trades, and then, you do that and you're gonna have some really nice results. And just to show you guys kind of what that looked like on the charts, you can kind of see right here, this is 6.7 and 6.6, so this is where the doji candle was. Obviously this is a little bit zoomed out. I can zoom in for you, which should help hopefully. But basically what you're looking at here, if we go to where this example was, 6 right here, right? So you've got this candle right here. This is the doji, this is the hammer candle, and then the next day they open and they close above it, and that's when you get in. In the pre-market, or just at the immediate open of the next day, they opened at like 22.62, which is where you get in, and then you can kind of see it did really well, and just kind of kept going up and up and up. And so what you're looking at on this trade, obviously in retrospect, but say you take it to like 30, 31, you're looking at basically, $8 on a $20 stock. $10 on a $20 stock if you're really good, which is like 50%. That's really solid. So you can kind of see, like, even with bigger companies, when this happens, you can have larger moves, but again, the goal here is to scale it. And so if you scale it with options, and then you get like, let me see what the prices are right now. If you look at like the premiums to actually get into a position like this, the premiums usually stay the same over time. So for this trade, looking back at it, right, you're looking at maybe like a like a 1-year trade, right? And so if you want to buy 1-year options on this like today, basically you're kind of looking at calls that are about $3. You can get, you know, dollars, but about $3. So if you're investing $3 here and then you wait for it to go out, basically you're making like $8. So you're kind of like doubling, tripling your money. Stuff like that is the goal. Again, the main principle with this is that you have like a defined upside. You kind of know where it's going to go with certainty, because certainty is the biggest thing. If you have certainty in the position, then you can get the results that you want. You can get to that end result, and it's just kind of all based on the growth that you want to have here, right? Which is kind of the core foundation, is knowing, like, you know, this is the reversal section right here, and then here's where it's gonna go. And then once you have that down, you're good. I mean, it's a really, really solid setup. So definitely good to, I mean, obviously it's easier to look at like what's happening today than it is to look at what's happening a long time ago. But you can kind of see it in this chart pretty well. You see your hammer, you see the reversal, and it just worked out really, really, really well. So definitely in a cool example there where it kind of worked with a bigger stock, and then you can kind of learn from that, like the insane power of combining like candlestick patterns that might on their own kind of seem insignificant. Like this on its own kind of seems insignificant, but when you combine it with the knowledge and the volume from the dart pool, you actually get really, 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 really powerful results, which is really cool. So yeah, cool stuff. If you guys got a ton of value from this module, go out there, apply it, absolutely crush it, and I will see you in the next module. Thank you. Bye.